Now for our last session of the evening, which we're very, very excited for. We have three brilliant panelists joining us today to discuss angel investing in tech for good, hosted by Sifted's commissioning editor, Eleanor Warnock. Eleanor has more than a decade of experience in journalism and communications. She started her career as a correspondent in the Wall Street Journal's Tokyo bureau, and she was also then communications manager at one of Europe's largest VC firms, Atomico. She holds an MBA from INSEAD. I'll now hand over to you, Eleanor, to introduce our panelists and get the discussion going.
Amazing. Thank you so much, Millie, for the intro. And thank you so much to BGV and the BGV team for inviting me tonight to moderate this incredible conversation with some very experienced angel investors. This is, a real topic that's dear to Sifted readers and dear to me also. We're seeing, from my point of view as an editor, I'm seeing so many more angel investors that are choosing to specifically invest in tech for good and to do much more diligence around the social and environmental impact of the companies that they are investing in. And we all know that a lot of the trends that we see in the earlier stages just trickle on up to later stages. So if you want to see what's going to happen in the future, I feel like looking at angel investing is really the way to go. So, I'm going to kick it off with a little bit of intro to our three incredible panelists tonight. We've got Charly, who is in Vienna, I think you said. Hello, Charly.
That's right. Hi.
Amazing. Charly is an impact investor and leader of the Deep Impact Movement. He's co-founder of Tonic and KL Felicitas Foundation, and he serves as the chairman of the board of Impact Assets. Thank you for joining us, Charly. We've got Meganne. Meganne is an angel investor, board director, and startup mentor. She's got over 25 years experience in tech and consumer marketing, and she's personally invested in over 30 companies. Thank you so much for joining us tonight, Meganne.
Pleasure.
And then last but not least, we've got Rodney. Rodney is a former investment banker, non-exec director, and VC with nearly 15 years of financial services experience. He is currently chairman of Cornerstone Partners, a leading UK angel network focused on seed stage investments, supporting Black and diverse founders. Thank you, all of you, for being here tonight. Since we just it's a super short panel tonight, I'm gonna kick it off and get us into the discussion. Charly, I'd like to start with you, and I'd like to kind of get your perspective on how you think impact angel investing has changed over your time as an investor, just to kind of give us some context around where we were and where we are now.
Great. Well, thank you so much, Eleanor, for the kind intro, and many thanks to the organizers of BGV, the spring showcase event, which confused me because it's not spring anymore, but I got an explanation for that. Thank you. And I'm very, very excited and honored to be part of this panel here with you. So let me just briefly share a little bit about my background. And then I am a technologist. I have a PhD in computer science and had a very successful career in Silicon Valley with 3 successful startups where I was usually the VP of engineering or the main technical guy on the team. And the first one was a company called Next, which was the company that Steve Jobs founded after he was fired from Apple. And I was in charge of developing the OS, the operating system, which is now Apple's main operating system. And then he sold Next back to Apple in the late 90s, and then was the CTO of DataMind, AI company, to analyze our behavior. Like now they're doing it all over the place, right? We were the first ones, and the machines are now like 5,000 times faster, so they can really do a lot of damage with that technology. And then my masterpiece was Ariba, business-to-business e-commerce company, which we took public in 1999. And I diversified my stock holdings before the crash of 2001. And then my wife Lisa and I became what's now called impact investors shortly thereafter, so about 20 years ago. So in the early days, it was very difficult to find deals. It was also very difficult to do due diligence, especially all over the world. And that's why we created the organizations that were not there yet, like Tonic on the supply side of capital. So Tonic is now a network of high net worth and family office individuals and family offices, about 500 investors all over the world, about 40% in North America and 40% in Europe and 20% in Asia. And we started Tonic in order to do co-investments, right? And then we didn't have to travel around and share due diligence and all of that. So that was one strategy early on that actually fast forward worked out. Another one, is that Lisa and I founded incubators and accelerators. The first one in India in 2004 or 5 was not any impact accelerator around that time. And in order to create deal flow for ourselves, right? And then we started another one in Vienna, Austria, for Eastern European entrepreneurs. And Lisa, she's part Hawaiian. She started one in Honolulu for Hawaiian entrepreneurs. So again, supply side of impact capital, demand side of impact capital. And then we invested in a lot of intermediaries as well. So there was in the early days, there was a big bifurcation between social only and non-social, right? And that's more blended now. And I'm really happy about this because that's one of our objectives is to go beyond that. And we started experimenting with blended capital structures and hybrid business models and all of this. So fast forward, my last comments here are for the round is we now have in the last 5 years established networks like Tonic and others. We have impact funds and fund of funds in order to diversify even better beyond direct deals. And we're investors in Better Ventures, for instance, in Illumin Capital for diversity of GPs and what have you, and G Impact Capital and Burning, Burning Issues Impact Fund in Switzerland with female GPs. So we're gender overlaying, diversity overlaying most everything that we do, which is great. And there's lots more deal flow in many interesting themes like education, mobility. You can choose many of these. And today, and I finish with this for the introductory course, is I'm investing in the confluence of impact, technology, and consciousness, because I think we need to change the system in such a way that it includes impact. And that's only doable if you actually have the right level of awareness and consciousness. And so we combine that with deep impact groups and what have you. And I'm investing in companies like Rainfall that does the tokenization of our digital footprint in order to monetize that, or proof of impact, where we put impact events on the blockchain in order to make it more traceable and what have you, and then run AI algorithms over that in order to go from outputs to outcomes. So that's my current focus. Let me stop here.
Oh my gosh. I feel like we're like listening to the future happen right now. Yeah. So Charly, you talked a little bit about how in the early days when maybe impact wasn't a big thing, you found deal flow by, getting both the supply of capital and then also actually starting those accelerated incubators yourself to get deal flow. And I'd love to talk a little bit about that deal flow aspect of impact angel investing. Meganne, how do you source companies and how do you find great companies and great founders?
Well, I have been part of various angel networks in the UK. You had Clearly So was an early group of impact investors, and I think I'm probably less stringent in terms of how I define what I consider impact. I basically, my philosophy is to support entrepreneurs that struggle to find capital elsewhere. And particularly in the early stages, and are doing things that I find exciting and interesting and doing good for the world. And so I think, once you sort of start out into the marketplace, people find you. I work with the various LPs as well. So we try and diversify what we're doing. And I do have a lot of, I like working very early stage of businesses. I like to invest at that point, particularly on the impact side. So, so I do have, very interesting thing I heard when I first started investing, and I happened to be lucky to have a really good impact investor sort of do a briefing for me. And she explained that, there's this spectrum of, pure profit investment and a pure impact investment. And, a lot of people get confused along that spectrum in terms of where they are looking to invest. And you get problems when you have people who want, pure impact, but actually want to make a lot of money, and then vice versa. And I think that's the thing that I'm always, I've been trying to be very careful about when I invest, is understanding that what the entrepreneur themselves is looking for, and what I'm looking for, and making sure we have a synergy there. Because the last thing you want to do is find that you're with an entrepreneur who really has particular concerns about taking the business in different directions, and then as an investor you end up investing in something that has no out. output it. You have no way out of it in the end. Versus, you have entrepreneurs who I've had entrepreneurs who are doing really interesting things. The business struggles, and they're not prepared to look at pivoting in a way that they consider not consistent with what they're trying to do. And so, it's an interesting space, because you do get very different characters and, deep passion amongst the entrepreneurs. And I think understanding what you're after and what they're after is really important too. So.
And practically, how do you do that? Is that just spending some good time with the founder and getting to know them as an individual and talking about their goals? How do you do that, Meganne?
Yeah, absolutely. Because I think, when you've watched enough pitches, everybody has the same, we're going to exit in 3 to 5 years. And, and it's really having a conversation with them and understanding what motivates them, understanding, and I said early on, I said, when I first started, I said, one of the things that I like about investing in sort of social entrepreneurs is that they, there's a consistency in their view and a consistency in their approach that means that you kind of have a good sense of where they're going and what's driving them. Whether or not you agree with it is, a different story, but you do understand what's behind that passion. And I think that's what you really have. You have to, and I think entrepreneurs need to communicate that well to investors, and they need to make sure that they have investors that are along for the ride and, good or bad, that are there to support the mission of what they're trying to achieve.
Yeah, definitely. I think you brought up a really interesting point, Meganne, and something that I'd like to ask Rodney about, which is like this definition of what you think impact is. And of course, there is the textbook definition that, you'll see where people talk about the scale of social impact versus financial returns, right? But there's also like what the definition is to you as an individual investor that aligns with your values. And I'd love to hear from you, Rodney, about how do you define that for yourself?
Yeah, thanks for the question, Eleanor. And I'm glad that you picked up on that point in particular, because for us at Cornerstone, we very much see impact going hand in glove with commercial returns. And actually what's really exciting about what's happening now is that impact is starting to pervade every aspect of society, every aspect of angel and venture capital investing. And so, whereas in the past, impact investing was seen as almost a separate, almost siloed animal, today everyone's looking at impact in a much sort of fresher and unique way, and having a sort of a much more clearer lens on it. And so, at Cornerstone Partners, our focus with regards to impact is around diversity. We believe that fundamentally diversity has a competitive advantage. So it's not about just having a tokenistic diverse team with a black individual in the C-suite. Actually, having diversity of thought and perspective yields the best returns, and that's been proven in countless reports and research reports, both in the US, Europe, and as well as in the UK, which is fantastic. I'm a non-executive director for Conduit Connect, and the way that they think about impact is in terms of measurement of core objectives, and they actually came away with a scorecard which they developed in conjunction with Deloitte to actually look at 6 various elements of how you measure and capture impact, both pre-diligence as you assess the opportunity, but also post-investment as you continue to measure that impact for the life of the investment. So I think it's a really, really exciting time. And I think, a really simple example is lots of venture capital firms wanting to become B Corps. Corp is about institutionalizing impact within your organization. And that's something that I think should be embraced and something that should be celebrated. I think impact has gone beyond being just simply a niche product, a niche approach. It's something that should be part and parcel of how we assess opportunities.
And can you give some more examples, maybe beyond just VCs, wanting to become B Corps, of how you're seeing impact kind of becoming mainstream or becoming part of everything? Is that reflected in the kind of companies and the industries that you're seeing companies come from?
Yeah, I think there's a real understanding and acknowledgement of sort of some seismic issues and challenges that are facing the world, and that actually businesses are really well placed to provide some of the solutions to those challenges. So take, for example, climate change. We're really good partners with the Green Angel Syndicate that's led by Nick Lyth, and he's looking at investing at the angel stage, seed stage, into businesses that seek to provide a more sustainable future, particularly in areas of green tech and clean tech. Now that's really exciting because there's a huge opportunity there. Look at the amount of investment that's being shifted towards clean tech, towards climate change. But there's also a genuine challenge and an issue that needs to be solved, and technology and innovation within entrepreneurship has an important role to play in being able to be part of the answer there. So that's where I see sort of impact sort of playing a part in venture capital investing. For us at Cornerstone Partners, we believe that, you know, diverse founders have been historically underrepresented and have been historically ignored. And so there's a huge opportunity to create a far more inclusive investment landscape and remove some of the intersectional barriers to investment by focusing on those underrepresented founders. And actually, we also think that by focusing on those underrepresented founders, you can deliver outsized returns by capturing markets that have been historically overlooked and by capturing problems that are genuinely innovative and that haven't been looked at before. So it's almost like you hit two birds with one stone, as it were, in addressing the impact question, but also identifying the innovations of the future.
Totally. Well, we actually have a question about someone's asking if you could share the impact scorecard that you talked about, Rodney, which brings me to something that I also really wanted to talk about in our session tonight, which is how can these oftentimes very, very early stage companies actually, you know, measure the impact that they're having and share that with investors. And then, of course, when you're an investor, what sort of stuff should you be looking for these early stage companies to report? And obviously, given the fact that oftentimes when you're an early stage company, you're very few people and you're just trying to run a business, and you might not have time to, you know, enumerate everything about your supply chain and all that stuff. Charly, how do you think about that point of the actual reporting? I think you're muted, Charly.
Thank you.
There we go.
I think it's a very important question, and Rodney also already teed it up a little bit, that it's not about just reporting, but impact management. That you need to really, you know, go into the due diligence process, saying, what is the business about? Does it have impact or not? We would not invest in a business that doesn't have positive impact because we don't like the add-ons, right? You sell a shoe and you give one away. You know, that's not the impact for deep impact investors. And then we also look at the entrepreneur and see if that entrepreneur, if she is really an impactful person, then we go forward with the due diligence. If not, if she's only, you know, trying to maximize return for her and her team, then we would not invest. So the first screen is, are you an impactful person? Yes. Is your business impactful? Yes. And then we go into the financial model and then the impact model, right, in that order. And there's, you know, and we would not go forward if and we don't expect a whole lot of detail on the impact model in the beginning for a seed stage, because we help the entrepreneur actually develop the impact strategy. And I think it's not appropriate to demand something too detailed when the business model is still changing and everything is still changing. So we're careful not to impose our metrics on them, but we coach them to make sure that we measure things that are actually appropriate for the business to go to scale. And if the business is impactful, then we go to scale with that, right? And I think for the investee, right, for the entrepreneur, I think it's very important to be realistic to Meganne's point, you know, what type of capital they need. I mean, you know, getting to exits within 3 years, you know, I haven't seen that lately. You know, and it's not really about single time exits for us. We also invest in different term sheets. And I think the investors should adjust to the needs of the investees with respect to cash flow, with respect to when they're able to pay back or to pay back the investors and what have you. So we're not just investing private equity or venture, but structured debt and then demand dividend structures where the entrepreneur has a chance to sell us out of the business, right? And we get a certain IRR, and we put impact metrics into the term sheets, and we put impact metrics into everything that we do. But like I said, in a way that helps the business and not is a burden. So those are a few thoughts on both sides of the coin. And I think again, Meganne mentioned that the intentionality of the investor and the investee, it's the most important piece, that's aligned. Otherwise, you will have major disappointments on either side, right? And things are not going to go well.
Yeah, super interesting. Yeah, I think what you said about seeing if the individual themselves is impactful also really resonated with what Meganne was saying about finding that alignment with the individual and the founder. Meganne, did you have something to say around the kind of reporting and what, you know, I know that you work very closely with a lot of companies. What stuff do they ask you for help on when it comes to that sort of stuff, tracking and measurement?
Yeah, I mean, I think I totally agree with Charly. I think imposing metrics and reporting early stage is just cumbersome. I think you need to understand, I think working on the business plan and understanding what they're trying to achieve, and exactly if the business is in itself inherently impactful to succeed, if you exceed in the business, implementing the business plan, you're going to deliver the impact. I think what's more important as an early stage investor is helping the entrepreneur, the team, to prepare for their next stage. And especially if they're going to go for institutional money, then they need to start really clarifying what their metrics look like. Certain of the funds have very specific metrics they would expect to see. And so I think it's kind of coaching and working with them as they're starting to grow the business to start fine tuning, how do we talk about our impact and how do we measure that impact? And you don't want to be putting things in place that mean that they have to step back from the business and figure it all out. They should be just an inherent part of the KPIs of the business, really.
Yeah, totally. I think I totally agree with that. Definitely. Totally. I'd like to talk a little bit more about what specifically all three of you are excited about in the impact investing space. We heard a little bit at the beginning from Charly about some very futuristic things, but Meganne, maybe are there specific areas that you are really excited about, or you've seen amazing companies come from?
So I've been doing a lot of investing in sort of the food tech and sustainability space, and I'm not a scientist, so I have to sort of work a bit around this, but I find it just a fascinating sort of trends that are happening. I don't tend to lean too heavy on the consumer side of that. It's more about the agriculture and how things are being actually produced and taking care of the planet to some extent. And so I find really quite interesting, and I'm learning lots there. I also do an awful lot on medtech. And I particularly do stuff that supports women's health, because it's just been an issue that's been heavily underfunded over the years, and where the VCs have started to get into that, it tends to be in a particular demographic, and it's not really a broad spectrum female sort of health mantra that they tend to take. So I quite enjoy that, and I guess I've always done stuff in education. I'm sort of pausing at the moment to see sort of how it all kind of comes out of this year, and because I'm quite concerned about what's going to happen in the education space, and I'm quite concerned about young children that have had a very disrupted 18 months, and the diversity and the inequity is just going to get much worse. And I haven't seen any businesses yet that are kind of how they address that. I've seen one or two that are doing kind of interesting things with mental health for children, but yeah, those are things I'm sort of looking at.
And just kind of a quick follow-on question, and I think probably other aspiring angels would be interested to know this too. I think we're seeing like a lot of very technical companies arising in the impact space, right? Rodney talked about climate tech, right? There's like sustainable food, as you talked about. How do you do the due diligence around those companies that can be very technical?
So if I'm investing, I have one investment in clean tech, and I did it through a group of people who are all very knowledgeable in this space, and so I kind of rode along with it rather than taking it on myself. And it's the same. I always put, my background is marketing, and so I always try to understand, kind of where the business intersects with the end customer, and does that make sense, and is that because if that's true of any business, whether or not you're developing a climate tech or education tech, so I kind of put my focus on those things, and have to some extent trust my fellow investors on some of the diligence on the tech itself. Yeah.
No, but that's super cool. That's the power of syndicates, and that's the power of investing together. I think that's really amazing. Rodney, what about you? Specific sectors, areas that you're interested in?
Yeah, so I was just thinking about this because I knew you were going to come on to me next. I think the first thing is actually just pick up on the point that Meganne made around syndicates. I think the increased democratization of retail investing, I think, is really exciting. And I think we're very much just at the beginning of that trend and that evolution. You're seeing the emergence of cryptocurrencies, NFTs, the increased excitement around angel investing, and the need for platforms and marketplaces to kind of share knowledge, invest together, pool capital. I think it's really it's almost like a new vanguard in terms of fintech more generally, and it's about how does that kind of flesh out in sort of in the next coming days days, months, and years. So I think that's a really interesting trend. The other really interesting trend is femtech. So I think female entrepreneurship and sort of solutions that very much cater to that audience, I think is super exciting, and we're starting to see that really kind of take its place in various different areas, from dating through to sort of personal care products through to other aspects. And I think that's a really exciting space that's been untapped for far too long. And I think the final thing for us that we've always been quite fascinated by at Cornerstone is media. And I think particularly given the sort of increased polarization of sort of media discourse, where it becomes increasingly a question of extremes and increasingly a question around half truths and fake news and my truth is different to your truth. I think trying to return that back to some semblance of balance in normal discourse, and technology and the role that it plays in being part of that, I think it's going to be really exciting.
Definitely. Charly, did you have anything to add on areas that you're excited about?
Yeah, just quickly, I think, I'm also excited about democratization and fintech, right? Because when I think about the systemic issues of the financial system, then active participation of non-elite, normal folks is absolutely necessary. And we got to get there. And there's lots of exciting platforms out there, all the way from public equities, which I'm not a big fan of because they're, it's not really deep impact, but all the way to philanthropic and emerging crowdfunding and crowdsourcing and peer-to-peer types of networks. I think the overlay that we haven't talked about, and since I'm in Europe, that's a very important one, is ethics. And I think I almost think that every successful company needs to have an ethics charter. What do they believe in? And I just institutionalized one with the help of the board at the Impact Assets. So it's not a personal statement, but what's the company stand for? Because how can you say that the business that you're in is ethical or not if you don't state your beliefs and your belief systems, right? And that's a tough exercise to do, particularly in the polarized environment in the US, but not only in the US, right? Which words you use. And I encourage everybody to reflect on that. And then to add to Rodney's thing about democratization, I think the other systemic issue, if you just look at the venture capital industry and finances, is that it only serves the investors. And so I see that tokenization as a huge opportunity to at least get rid of that particular design flaw and to involve all the stakeholders, including the beneficiaries, in it by designing the tokens in such a way that if we achieve a bigger impact, that they will personally benefit from that with additional tokens. And that's doable if you do it right. And so those are modern ways of not just scratching at the surface of capitalism, but I think it goes at least not maybe to the full heart, but at least to some significant shortcomings that are designed into the current system that we want to really bust open and go through it.
Super interesting. I'm going to pick up on one of the questions that we have in the Q&A as our final question, because we're coming into the last couple of minutes of the session. The question was, what key areas does the panel think investments are needed to maximize impact? So I'm going to take that as what levers can startups pull to maximize impact? And I think, Charly, you touched on that by, startups articulating ethics can be a very strong way to maximize their impact. Rodney, are there other areas that you think that startups should focus on if they're looking to maximize impact?
Yeah, I think, are we talking specifically sectors, Eleanor?
Sectors or levers within the business that need to focus on.
Yeah, so I think within, so I'll touch on both. So I think within sectors, I think there's lots of sort of seismic issues and challenges that are facing the world, as I mentioned, where I think impact and innovation within early stage businesses can play a key role. So climate change is one. Agri-tech, so in terms of food production and waste, is another kind of key area. Supply chain more generally across the world globally. The use of labor. I think these are really key kind of topics that I think early stage businesses can play a really important role in. In terms of levers within organizations, I think one of the things that we've found at Cornerstone is that early stage businesses that have an impact ethos tend to be quite deliberate about how they set up their business. And they tend to be very specific about things such as recruitment to ensure they're removing bias with regards to hiring the best talent irrespective of background or gender or ethnicity. They can be very specific in terms of ensuring they have suitable diversity and inclusion policies to ensure that, as wide as possible of perspectives and thoughts are shared amongst the organization. And they're very, very deliberate about how to measure that impact over a period of time. And so, whilst I definitely agree with Meganne that measuring impact is not perfect science, I also believe that, you can't improve what you can't measure. And so you've got to have some form of framework by which you can try to develop a toolkit by which early stage businesses can start to understand how they impact both their shareholders, but also their broader stakeholders. So that's really, really important. I think early stage businesses are really starting to help companies with that. There's a company that we came across called Flare Impact, for example, that's encouraging more conversation within the employee base, within organizations around things like culture, ethnicity, diversity, and how that impacts their day-to-day lives. So seeing early stage companies play a role in that area is quite interesting.
Super cool. Well, I think we are out of time, but thank you so much, all of you, for sharing your views. It was amazing. We heard about, how investment, angel impact investment has evolved, the power of syndicates, areas from clean tech to femtech that all of you are interested in. And yeah, it was really amazing. I learned lots of things, and I feel like I have lots of ideas now about articles and things that I want to write. So thank you all again. And I'll turn it over to Millie.